Hi everyone, I'm going to take you through application problem 2-3. In case you're working on this for tonight, it's due by midnight. And if you need a little guidance, you can take a look at this, which obviously you already are, so if you're listening. All right, so 2-3 is very similar to 2-2. We just have 5 transactions here again, and each transaction gives you 2 T accounts that you can fill in for each one. Okay. Couple of things to review. Remember, the debit part of the transaction goes first. So that's always going to be the first entry. Okay. And the credit part obviously goes second. So reading each transaction, you have to decide which 2 accounts are affected. So you choose the account that will have the debit part, the debit entry first. Okay. So I'll go through these with you together here. So June 11th, received cash from sales. So we know our 2 accounts are cash and sales. So if you're receiving cash is an increase to your cash account. Cash is an asset that increases with a debit entry. So we're going to go down here, and cash is going to be listed first, and then sales will be listed second. So we have 22,000 debit into cash account and a 22,000 credit entry into our sales account. Sales increases on the credit side, on the right side. Okay, sales increases, what I was going to say is sales increases owner's equity, and owner's equity is on that right side of the equation. Credit entries increase owner's equity and sales, okay, with a credit, which is on the right side. All right, June 12th, paid cash for advertising. So your 2 accounts there are cash and advertising. If you're paying cash, cash is going down. So that's not going to be the debit part of your transaction there. So the other one is advertising expense. Expenses are always and forever debited. So that's your clue there. So let's do that one. So June 12th, we have advertising expense. And then the second account is cash. And what was that amount again? 1,500. So advertising expense is going to be debited by 1,500. Cash is going to be credited by 1,500. Okay. All right. Number 3, third transaction, June 14th. Sold services on account to Nico Valenza, $17,000. Okay, so you made a sale. You sold services, but you sold services on account. Nico did not give you cash. So Nico Valenza becomes an account receivable for you. Account receivables are assets. Assets increase with a debit entry. So that first account then is going to be the account receivable of Nico, and it's going to be debited by $17,000. So this is showing you on the books that Nico Valenza owes you $17,000. And you made a sale, even though Nico didn't pay you cash yet, you still credit the sale. $17,000. That's a big sale. Okay. June 18th, paid cash to owner for personal use. That means that the owner withdrew cash from his business in the amount of $5,000 for personal use. So that's going to be the owner's drawing account, is going to be one of the accounts that's affected. The other one, obviously, will be cash. All right. So if you're paying out cash, cash is going to go down. Cash goes down with a credit entry. That means the owner's drawing account is going to be debited by $5,000. So let's come down here to June 18th. We're going to look for the owner's drawing account. And that fast, I forgot. What was it? $5,000. Okay. So $5,000 debited to the owner's drawing account, and cash is credited $5,000. All right, and the last one, June 19th. Received cash on account from Nico, $10,000. Okay, so up here on the 14th, we made a sale for Nico Valenza for $17,000. Now he is paying us $10,000. Okay, so if you received cash, you're getting $10,000. That's a big increase. That's an increase in your cash account. So that's the debit entry for that one. So this last one is going to be cash is the debit entry, debit of $10,000. And then we are going to credit the account receivable for Nico Valenza. We're going to credit his account by $10,000. Okay. You see up here, he owes us. If we just look at this on the books, we see that we have a debit balance of $17,000 for Nico Valenza. That means he owes us $17,000. Down here, he paid some cash, so now we see a $10,000 credit on his account. He really now only owes us $7,000. Okay, and that's this one. All right, I'm going to move to the next one. Hopefully this helped. Let me stop sharing.